Hi everyone! So today we're gonna take a look at 3 high quality REITs that I think they are really awesome right now, and they offer more than 5% dividend yields. But before jumping on their analysis, let's take a look at the sector performance. Year to date, the S&P is up 1%, while the real estate is only at half, 0.42%. If we just take a look at 1 year, the S&P is 26% and the real estate is around 3.47%. And maybe this means that the sector is undervalued. First up is Vici Properties. This is a powerhouse in the gaming and hospitality real estate sector. And Vici Properties is a leading experiential REIT, right? It owns some of the most iconic gaming and entertainment destinations in Las Vegas. What I like the most about Vici is its focus on triple net leases, where tenants are responsible for property expenses, ensuring Vici enjoys stable and predictable cash flows. Now let's go and analyze it. We jump to the Seeking Alpha, and right here you can see that it currently trades at around $29.5 per share, and over the last year it's down minus 9%. But the most interesting part is the dividends, right? So let's go to the dividends and zoom in so you can see easily. And Vici right now offers a dividend yield of around 5.9%. The payout ratio is $1.73 and the 5-year growth rate is 7.7%, which is really good for the starting dividend yield. We are also interested about the payout ratio, but instead of taking into account this value, I'm going to the dividend safety tab, and right here you can see the AFFO payout ratio, right? But we're gonna take a look at the forward one, okay, which is this one, and right now it's 75%, which is a good value. And just remember, these are REITs, right? So they have to pay most of their cash flows to the shareholders. The average is 74.96%, so it's really at the average, so they're very close, right? At the end of this video I want to compare all of them, so I'm gonna save these values into this spreadsheet, where the first one is Vici. The dividend yield is 5.87%, right? The 5-year growth rate is 7.7%. The price to FFO, it's a valuation metric that we can find on the stock analysis tool. So let's search for Vici, and on the statistics tab you can find the price to FFO ratio, which is 10.93. So let's just plug it here, 10.93, it's correct. And this is the annual dividend after 35 years of investment. So we can see the value right here. So we start with $1,000. We don't invest additional annually. The dividend yield is 5.87%. We expect the annual dividend increase to be around, for example, let's say 7%. And the expected annual share price, I think 3% is good enough. And right here we're gonna type 35. So the results are really good. We obtain an average annual return of 13% with an annual dividend income of $17,000 and an yield of cost of $1,352. So let's try with only 4% dividend yield increase, right? This one will return around 9%, and the annual dividend income is around $1,630 per year. And this doesn't take into account the inflation, right? So if we take into account the inflation, the numbers would be different. I'm gonna take this number, right, with only 4% expected annual dividend increase, because I think it's more realistic. So it's around $1,630 per year. And this is just an estimate, right? So in 35 years, a lot of things could change. So it could be a lot better or worse. But I think it's fun to have this kind of statistic. The next one is known as the monthly dividend company. And this is Realty Income, which boasts a diversified portfolio of over 13,400 properties across various industries. I'm going to the Seeking Alpha type O, which is the symbol for Realty Income. And as you can see right now, Realty Income has experienced a drop and it's trading at the 2024 levels. So maybe it could be a great opportunity right now. If we go to the dividends tab and zoom in again, we can see that the dividend yield is sitting around 6%. And the 5-year growth rate is around 3.55%. So it's not a huge dividend growth rate, but it's just a bit higher than the inflation. So maybe this could be concerning. And this 0 years dividend growth is not accurate because they grew the dividend year over year, and even during the recession they didn't cut the dividend. So that's a very good sign, and to me this is a trust, a credibility sign about the management. Cool. So let's go here and save the data. Oh, it's around 5.95% and 3.55, and I think this is more accurate than the Vici. And the price to FFO is around 13.41. So yeah, this is higher than Vici. So right now Vici, it seems it's undervalued than Realty Income, right? And just let's take the simulation and type here the details. 3.5%. I'll keep the same. So we're gonna obtain around $1,224. So even if the starting dividend yield is a bit higher because of the low 5-year growth rate, it's not really that good. But I did a mistake. Right here it should be 4, right? Not 7. Okay. Because right now it's 7, but we simulated with a 4%. That's great. That's awesome. Now let's go to the third REIT. This REIT focuses on life science and technology campuses, catering to tenants in the healthcare and biotech sectors. Most of the time it's labeled as an office REIT, but this is different than regular office REITs because it's specialized on this healthcare type sector. Most investors and people are concerned that remote working is going to impact negatively the office REITs. But Alexandria Real Estate is different. They address to the healthcare sector, right? To the scientists, and they cannot just go at home in the bedroom, in the kitchen, and just research the new drug, right? So they need a place with high-end equipment, with a lot of things that should be in a very clean, controlled environment, not in their living room, right? So I like Alexandria Real Estate. But now let's take a look at the statistics. Okay, let's type here the ticker. It's around $100 per share, and the dividend stats are these. So the dividend yield is around 5.32%. The 5-year growth rate is 5.35%. which is, I think it's accurate. And yeah, they've been increased the dividend year over year. Now let's go and save this 5.32. 5-year growth rate is around 5%. And price to FFO, let's see what the value is. It's around 11. And right here, 5.32, 5%, 3%. Yeah, I think it's good. And 35 years invested. The value is really nice, 9.38% average annual return, and $2,400 of annual dividend income, which is the highest. Of course, these values are very dependent on the 5-year dividend growth rate. So if we sort by the price to FFO, and we sort the lowest being the first, which means the most undervalued, it seems that Vici is a very good bet right now, followed by Alexandria Real Estate, and the last one is Realty Income. You shouldn't take this as a financial advice. It's only my analysis, my thoughts about these 3 REITs, and yeah, you just need to do your own research, and if it fits to your goals, it's your choice to invest or not in these companies. Thanks for watching, and if you found this helpful, please support me and support my YouTube channel to grow by hitting the like button, the subscribe button, and also activate notifications to receive the newest stock analysis videos from my channel. I just forgot to show you the charts and the momentum. So if we just take a look at the Vici, for example, it trades around the $29 support level. So as you can see, in the recent years, many times the price was around this level. And let's take a look also at Realty Income. It's the same story. It's around 51.5 support level. So seeing these charts, it seems like they are trading at a support level that could give you good returns in the future. And also let's check the Alexandria Real Estate, and this one is trading also at this support level, and I think it's 99 and well below the 50 and 200 moving averages.